Good morning, everyone. Thank you for joining us for the Game Edge pre-market prep on Friday, July 18th. Happy OPEX, TGIF. Thank you, everyone, for joining us this week. Yesterday, we were off, not a significant amount of posting on social media. Our team was a little busy yesterday, but we're back at it this morning. So again, thank you for joining us. Make sure you're following us on YouTube. Hit that like and subscribe button. You'll be notified when we go live, as well as follow us on X. And then sign up for our weekend newsletter. We'll be having a new newsletter coming out this weekend. Important topics that we like to discuss via an array of education, SPX option structure, as well as our philosophy here at Game Edge, and then how we use our tools to trade. As always here at Game Edge, if you followed us for any amount of time, we go through sentiment, structure, and trend, and then we look at the 0DT structure and discuss our game plan for today. As always, we start with our market trend model. Again, this is based on the tick index. You can research that at your favorite investing website, but the quick takeaway is it's based on the buying versus selling within the overall market. This bolded white line here that I'm referencing is our intraday instantaneous CT, cumulative tick. Again, indicating if there's more buying versus selling in the market. We discussed the weakness the previous few days on the 14th and 15th, heading into the 16th, and we saw that quick recovery back above the shorter term moving averages. We got long with members as well as our team traders, long ETFs, as well as some other positions when we started taking back the shorter term moving averages, again indicating that more buying was coming in the overall market versus selling. So as of now, we're traversing back to the upside. We almost had a linear update yesterday, which we discussed as the slope of the cumulative tick. Again, just shows strong buying in the overall market. The filtered cumulative tick plus 1,000 minus 1,000 block orders was above zero, recovered rapidly, and then moved back to the upside. And then our new highs versus new lows indicator, obviously new highs are significantly outpacing new lows, again indicating breadth and overall buying in the market. And then our longer look back period, the red above cyan, turned back to the positive slope. We had one day where our TC3 almost turned off, which is our mechanical portfolio, but recovered quickly, and then we entered and exited positions yesterday. We exited 21%, 7% positions of Tesla for nice gains, as well as an AMD position that we took off 12 to 14% profit on that. So we've exited some nice trades this week for our mechanical portfolio. So if you want to know about that, make sure you check out the education from our posts on X the past few weeks, as well as our reviews, our quarterly reviews that we posted, that our mechanical portfolio beating the SPY and SPX buy and hold. So moving on to the SPXA, obviously we know the SPXA expiry this morning, so those will be rolling off. And then we'll move on to the next expiry, which will be the August expiry. So we'll watch to see if that expiry of the SPXA unhinges any of the guardrails that those were maintaining. Again, call dominated above and below spot price. SPXA is your slower, larger turned over contract. So again, this is institutional or larger market participant positioning. Again, just call dominated above and below spot price all the way down the structure. So really no change there. Even after this OPEX, 6350, 6400 overhead, obviously significant speculation, then all the way up towards 6500, which is actually COI on SPXP. Not really anticipating, obviously, we move up there that rapidly, but just something to keep an eye on. So as long as the structure continues to be maintained, any pullback will be supportive, and we'll look to get involved on the long side on a longer term overall time frame, which is why we reference the SPXA and the SPX options complex, because it's the largest and most liquid that we can look at for overall structure and control. SPXP is our speedboats. Obviously, these contracts turn over much more rapidly. Call dominated again heading into today. You'll notice our expected move is pretty dampened, 0.6%, 38 points. So again, that's within the overall move of up to 63.35 or down towards 62.55. Just from a quick view of the expected move, you'll notice that peak X is up here at 63.50, and then actually COI is all the way up at 6,500. So if we're above 6,300, We'll look at the 0DT in a few minutes. We look for a move up towards this quarter level, 63.25. That may be a stalling area depending on when we reach that and how our intraday volume looks, which is our volume analysis to see if call speculators are targeting higher strikes. And then 63.50, if we do reach that level, we'd most likely anticipate that would be the cap on price today. We do see COTMC up there. That's where out of the money calls become in the money. And then to the downside, 62.85, and then all the way down to 62.60, 62.50 we'll talk about is the bottom of our drunken sailor range on 0 DTE. So we'll discuss that in a few minutes. But again, COTMP is there also. That's where out of the money puts would go in the money. Again, moneyness matters, fear and greed components. So this could be an area where you see some profit taking and stalling, and that will also match our transition area on SPX 0 DTE. Moving on to the SPX PGEX ratio. Again, this is based on a put call ratio, but we add a time component, which is gamma. We've been discussing this dotted red line. It dropped all the way down to 1 on the pullback in the SPXP, and we said if we needed to see this recover pretty rapidly back to the upside, indicating short dated call gamma was going into the overall complex. Again, this is spot price sensitive. So the spot price moves up, we capture more of those out of the money calls become in the money, and then obviously that short dated call gamma is captured also. But again, this also captures the out of the money call speculation to the upside. So obviously that recovered very rapidly. We discussed staying above that 1 level, or a quick recovery would still indicate that call speculators were in control, and then we would look for more upside, which we saw change in very rapidly. So again, call dominated, call speculators in control heading into today. Obviously, quick recovery of the GEX ratio, which is great, indicating everything is alive and well with the call speculation and the bulls are still in control. Delta balance SPXP, again, this is separating the two planes above and below spot price, looking at the option structure and the delta. Again, indicating delta balance is pegged at 1, so indicating that call speculators are again maintaining full control. We do see that right-hand plane dropping a little bit, still above 0 though, but again, that's that out-of-the-money call speculation. Could be waning just a little bit as we head into today, but the in-the-money call speculation is in full force, so any pullback again will be supportive type action, which we've discussed. We talked about that middle of the week weakness that we were seeing projected on out in time, and that came to fruition on Tuesday. And then into Wednesday, we recovered very rapidly. Projection for next week after OPEX so far looks very constructive. Obviously, we see in the money calls dropping below 0, down below us. Obviously, after OPEX, those most likely some of that structure will be removed. But the out of the money call speculation recovers rapidly, and delta balance either staying at 1 or dropping. Again, this would be midweek next week. So possibly some short-term weakness in the middle of the week, and then a recovery towards the end of the week. After OPEX, obviously, that money has to be displaced or put to work somewhere. So we'll get a better handle on that heading into Monday after we get OI updates over the weekend of where that money was deployed from the options expiration, and does it go into speculation higher with out of the money call strikes, or do we see some put speculation, or just a wait and see type of approach. So we'll continue to monitor that structure after OPEX and see how that structure changes day over day. SPXP speedboat call dominated above and below spot price. Again, you'll notice the dampened volatility of the expected move 0.6, 38 points. So you can roughly look at that over there, percent from spot. See that up here towards that 63.35, 63.30, even the 63.25 quarter level would be expected move to the upside as of now. And then to the downside, obviously looking at that 62.50 area, 62.60, which has been a historical area, TA, as well as an option structure standpoint to the downside. Staying above transition will be the utmost importance to stay in a call-dominated positive gamma environment. So again, any pullback to transition could be an opportunity to get involved. Drunken sailor range, very narrow today, very low exposure area, so unambiguous of where these key levels are at. Again, to the downside, 62.60, that's our index level. Again, we would anticipate all of that to be supportive to the downside. If you do get below 62.60, then we do have an opportunity to move down towards that 62.50. And then ultimately, 62.20 would be an area to the downside that we would continue to watch. And then obviously 6,200, very large gradient. Again, not anticipating us to move down towards 6,200 unless we see a significant change in structure and sentiment and overall trend. We do have an opportunity to move towards 63.50. It's going to be a significantly overhead large weight This charm will continue to grow on these out of the money calls. So we'll continue to watch that. But we do have an opportunity to slow grind up at least towards the quarter level and above the quarter level, 63.50. So we'll obviously watch that throughout the day. And then our intraday volume analysis will be key. If we see speculation to the upside on higher strikes and our call and put centroids are moving to the upside, then again, the opportunity becomes greater that will move up towards that 63.50 level. Net stat command, this shows your highest sensitivity strikes. Again, I've already discussed those extensively here. 63.50, those out of the money calls, that's that target range to the upside. And then 6,300 in the money calls, as well as the transition will be those key levels to stay above. You see the net charm here, fairly balanced with the 63.50, the out of the money puts the 6,300. So again, key level staying above. Again, and price discovery is not an absolute on these. You can see that sweep down below 6,300 to transition and then back above. So again, just because we go below 6,300 intraday doesn't really mean anything changes, but just a significant sustained amount below that level would change the overall look of the structure. And it would have to stay below for a significant amount of time. And then you want to see that intraday volume command targeting strikes to the downside. So again, a lot of people get wrapped around the axle for just quick moves down below these key levels that we discuss, including transition. But again, you're going to see transactions into those levels, whether that's closing of puts or closing of calls, and then you get a reflexive rebound off of that once those mechanical deltas are either added or removed and the hedging is occurring. So again, sweeps below these levels and above. It's just if you stay below these levels for a sustained amount of time, and then the overall charm would continue to grow and cause a headwind above or below each one of these key levels. So again, we'll continue to watch this intraday, but key levels for today, 6,300, 6,350, as well as our overall transition level down towards 62.75. And again, we could even pull down towards the bottom of Drunken Sailor range, and it would still be very constructive. As you see, this is a low exposure area. It can be driven very rapidly through these areas, and then you hit a point where you see some monetization, and then you see reflexive action back to the upside. So trade for us today would be above 6,300, grind towards the quarter level and 6,350. Pull back towards transition again would be an opportunity to get long. A low exposure area, but transition, as long as it's supportive and it holds, which would be constructive, we'd look for a long there. And even a pullback down towards the bottom of the Drunken Sailor range, we'd look for a long. Below Drunken Sailor range, you could get a little bit more cautious for a move down, but really not seeing a significant amount of speculation to the downside. So we'd have to see that out of the money put speculation really start to ramp up for us to really change our overall structure, or for our overall thesis for today. So with that, we'll move on to the morning SPX level. We're already at 63.13. This is obviously projected open. SPYs to the upside. IWM continues its relative strength. And then Qs here also. So again, I've drawn 6,300 on the SPX for a pullback area. And then transition zone is down below us. Again, highs of yesterday were 63.17. I think 63.20 again, so that's at 63.25 level to the upside that we'd be watching to get above for a move towards 63.50. I would anticipate some stalling at the open if we move rapidly towards that 63.17, 20, 25 level. Maybe some stalling, some chop around and pull back, and then just kind of within this overall range of 6,300 to 6,325 early on in the session. So we'll watch that. So if anybody has any single stocks they want to go over, let me know. If not, I'll hang around for another minute, and then I'll jump on with our members in our Discord. Feel free to come join us. Again, a great team of traders from all the way from market makers to individual people, individual traders managing a significant amount of money, as well as new traders just starting and learning how to use gamma, delta, our intraday levels, and learning to trade single stocks. So just a great community with a ton of commentary, a ton of education, and everybody helping everybody else get up to speed and become profitable traders. So again, if you follow us for any amount of time, make sure you check out our X post as well as our YouTube. And with that, I hope everybody has a great weekend, and we'll provide some intraday updates, and we'll see you later. Thanks.